Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host, Nickey Mirchandani. Well, festive greetings out there. Indian equity markets are set to kickstart holiday shortened week on a positive note. At least the banking stocks are expected to lend some amount of support. It's going to be a show of sorts, at least for the entire banking sector. But let's look at the global cues at this point of time. GIFT Nifty index is indicating a positive start coming in for Indian equity markets, and US stocks, they ended sharply lower on Friday on rate hike fears and the Israel-Hamas conflict escalation. Well, let's also talk about Asian shares. They've drifted lower early in morning due to the risk of sentiments. Talk about FII and DII data. Foreign institutional investors have bought in shares worth around 456 crore and DIIs have purchased equity to a minuscule amount of 8.53 crores put together. Now, let's also look at FII trend in the overall F&O segment. Well, they have been net sellers for index futures, but they have been buyers on the index options. Along with that, they've also been sellers across, be it in terms of Bank Nifty option, be it in terms of options put together. So that's the cues that we're picking up early this morning. But also, let's talk about the stocks which are still in F&O ban. Indiabulls Housing Finance, that's the one for you. What comes out of the ban is Delta Corp, Balrampur Chini, India Cement, Manappuram and GNFC. Talk about option cues. Well, Nifty PCR right now sitting at 0.9 versus 1.01, indicating fair amount of perhaps entry point for the market. Risk reward ratio from a very market perspective looks to be skewed now more in the favor of the positive bias. Earnings that need to be watched out for: Torrent Pharma, PNB Housing Finance, along with that Mahindra Logistics, Mahindra Holidays. These are going to be some numbers, but let's quickly go and discuss the trade setup strategies for the day along with the entire recommendation with Prashant Sawant, who is the founder, Catalyst Wealth. Morning there.
Hey, good morning, Nickey, and good morning to all the viewers.
All right, greetings there, festive greetings to you, Prashant. Let's start off with what do you actually make out of this setup? Do you think in the holiday shortened week markets could do fairly well, brush off that risk off sentiment that we were otherwise looking? What is the immediate support and resistance level?
Yeah, definitely. Wish you the same. And I think it's a shortened week. It's going to be a tricky week. Now, one eye should be on the India VIX, the volatility index. Currently, we are hovering somewhere near the 11 level. If we cross 12, 12 and a half, I think, and with a serious down move, I think that would cause the markets to crack. What are the important levels? According to me, for Nifty, we are currently trading somewhere around 19,520 in spot. 19,400 happens to be a major support on closing basis. If we close below that, we may nosedive somewhere to 19,100, 19,000 odd levels, which happens to be a major support from a trend perspective on the bigger time frames. So for now, 19,400 is a make or break. And I think the texture of the index is currently in a sell-on rally mode. So if there is any rally to 19,600, 650, we may witness pressure and we may witness some serious selling. So my view would be to stay away from the indices and look at opportunities in the individual stocks. As far as Bank Nifty is concerned, there itself we have a slight positive opening considering the results from Kotak and ICICI. But overall, I think it is far more weaker than Nifty. And unless and until we don't settle above 44,200, every rally in Bank Nifty would be sold. From a support perspective, 43,600 in spot happens to be a major support. So for both the levels, 19,400 and 43,600, they need to hold for the week. If they break, we may experience some serious pain. And one needs to keep an eye on crude. The minute we see a spike above 95, I think there can be a reaction in the Indian markets.
I also wanted to chat with you about, you did mention Kotak Mahindra Bank and ICICI Bank. These are clearly the two majors. So let's just say ICICI Bank is going to be that heavyweight which perhaps dictate the trend of the market. How are the charts faring for this one?
So I think ICICI Bank is at a major support. That support happens to be 920 level. And unless and until we don't close below that, I think we can see a decent pullback here to levels around 950, 955, which should help Bank Nifty to consolidate. Considering the weakness in HDFC Bank, I think ICICI needs to hold out. Even Axis has turned into a weaker model now, considering it is trading way below 1,000. So ICICI needs to hold. I think if you look at Kotak, the overall texture is weak. And it is again at a major support of somewhere around 1770, 1760. For any momentum to creep into Kotak, it needs to go above 1800 levels. The minute it closes above 1800, I think we can see levels up to 1840, 1850. But overall, if you get any rally in the indices and if you see any of the frontliner stocks nearing your cost or in profit, my suggestion would be to trail closely or book and wait for some dip in the indices to re-enter.
All right, that's the word coming in. Kotak Mahindra Bank, 3% weightage. ICICI Bank around that 8% weightage. These are the two majors which have declared their numbers. ICICI Bank, fairly decent set of numbers. But the stock of the day will be Kotak Mahindra Bank. That's the one that you need to watch out for. Of course, there's been flurry of results that have come in. Yes Bank has also been has reported, IDBI, RBL. These are some of the banks that have reported in their numbers over the weekend. So it's going to be a good show to watch how these numbers essentially fare for the banks. But Kotak Mahindra Bank, that's where you will see most of the momentum, and the brokerage is perhaps talking about it, where the Q2 profit is 24% up year on year. But RBI has approved an appointment of Ashok Vaswani as the managing director and the CEO. An external guy coming to head the bank. That is something probably that will ruffle some amount of feathers out there for the banking system, and that perhaps will weigh down on the counter. But I'm going to be addressing in the market open first and then go back to Prashant before we address the stocks and news. Nifty 50 right now. Well, it is a weak start rather. Let's just say a flat start with some amount of negative bias. GIFT Nifty was indicating a little positive start coming in for the markets. So brushing off that sentiment, 19,520 levels. That's the level that we are looking at right now for Nifty 50. Bank Nifty, clearly the theme for the day. Let's see how is that stacking up. Bank Nifty is lending some amount of momentum right now for the markets. We're seeing 0.2% of gains coming in for Bank Nifty index overall. And if you talk about the other banks that we have in terms of ICICI Bank and Kotak Mahindra Bank, just to see how are they faring and the pulse of the market before we go to the mid cap and the small cap index. ICICI Bank, another solid quarter in offing, delivering that, and the momentum is there in the stock. Over 1% of gains coming in for that one. But let's also talk about Kotak Mahindra Bank, which is the stock of the day, which has taken a hit, 2% down. Like I said, it's the external candidate which has been appointed as the managing director, and the CEO perhaps would not sit down well as an initial uncertainty. Perhaps it's done past with, but you would see some amount of caution perhaps building up till the time the succession plan is clearly laid out. But also let's talk about what we have in terms of the mid cap and the small cap index, just to see how is the momentum stacking up there. Well, mid cap index losses to an extent of 0.2%, and small cap index, that's the one that you need to watch out for. The momentum remains intact. Outperformance continue for the small cap basket. Gains to an extent of 0.2% coming in for the small cap index. Let's also talk about the other sectoral indices that we have on the list. IT is down perhaps with losses to an extent of 0.2%. In terms of what we have for FMCG, that's the one that we need to look out for. Pharma is also not doing well in early deals, but FMCG is clearly the interesting one. The stocks took a hit after reporting in their numbers, and in today's session, the index isn't really doing too well either. Well, you're seeing that negative sentiment perhaps being broad-based in nature somehow, barring Bank Nifty. That is the one that is lending in support. Metal index, 0.2% of loss coming in for that one. Let's also talk about the top gainers and the top losers, just to see how is the trend stacking up. ICICI Bank, that's the top gainer. Bajaj Finance, another top gainer for you. Nestle India, well, that's the one that is an interesting one that we need to watch out for. Apart from that, we're looking at Bajaj Finserv, Tata Motors and Axis Bank. These are some of the top gainers that we have. So Bajaj Twins, clearly along with ICICI Bank, it is a day, like we pointed, which has been led by the financials, right at the front foot there. But let's also talk about the top losers on the list, just to see where is the selling pressure coming off. Kotak Mahindra Bank, stock of the day, perhaps also weighed down by the external CEO candidate that is coming. Stock is now down and out for it's just down by over 2%. Grasim also, TCS, these are some of the top losers that we have on the screen. Along with that, Ultratech Cement, NTPC and Titan. These are some of the top losers that we have on the list right now. But we're going to go back to Prashant and check with him. What does he make out of this open, where Nifty 50 perhaps is doing a subdued start, but Bank Nifty, offering some amount of solace. Prashant, come in on this one. Would you still have the same strategy that you were suggesting? Sharper sell-off coming in for Bank Nifty as compared to Nifty. Will the strategy still remain intact at this point of time?
Yeah, definitely, because the main part remains here, Nicky, which is we are trading very comfortably below 44,000, 44,200 levels, which is not a good sign. And unless and until we don't close above that, I think any and every rally would be sold. So that's why I recommended, if we see any profits in the banks which you're holding, it's better to trail or at least book some part of the profit, so that if there's a decline, you're in a comfortable position.
All right. Apart from that, Kotak Mahindra Bank, ICICI Bank, we've also spoken about. Perhaps let's talk about Nestle. That's the one which is an interesting one. What do you make out of Prashant, and what kind of levels are you suggesting for Nestle right now?
So I think Nestle is in a very strong position. The volumes are picked up. There is a very strong breakout, and the price has been trading comfortably above the breakout levels, which are all combined together positive signs. I think one can get in with stop losses around 23,900 and hold unless and until we don't close below 23,900. I think we may see levels somewhere near to 25,000, 25,200. Overall, it's a volume back book, which always adds more to the confidence. So one can definitely look at entering Nestle.
All right, Prashant, we're just going to leave it at that. And thank you for taking out the time and speaking to us.
Thanks.
All right, let's address in the stocks in news, at least three of them. We have a galore out there, but we're not going to be talking about it all. Let's talk about first what we have in terms of ICICI Bank. It's a solid set of numbers that have been reported. Quarterly ROA remains at all-time high level of 2.41. GNPA and the net non-performing asset, that has been the lowest in 9 years. That we've seen put together. The asset quality clearly has improved. All-time high quarterly PAT for the subsidiaries. That's another a point that we need to highlight. But overall, steady set of numbers coming in for ICICI Bank. Net profit up 35%, NII up 23.8%, and gross NPA at 2.48% versus 2.76%. That's what we have in terms of ICICI Bank. Let's also talk about Kotak Mahindra Bank and the stocks that need to be addressed in. Kotak Mahindra Bank is the Q2 profit is down by 24% year on year. RBI has approved in the appointment of Ashok Vaswani as managing director and CEO. So that's the one that you need to watch out for. But if I'm just supposed to sum this up for you in 3 lines, then I would say the bank continues to deliver on asset quality, growth and profitability. The deposit growth is the best in 20 quarters. Loan growth is the best in 3 quarters. Asset quality is the best in 33 quarters. But you know what I really want to highlight is the change in CEO, which was expected, wasn't really expected to be an external candidate. Perhaps that raises in some question, but that's external candidate decision, delays in major new initiatives. That is also one of the highlights, or just let's just say worry that most of the brokerages have pointed out. But let's also go across to our fundamental guest, Anand Tandon, who's the market expert and has a good track of the entire market, just to see what does he make out of these financials and the growth story ahead. Morning there. All right, Anand, firstly, festive greetings out there to you. It is a crucial day where we have, results coming in from ICICI Bank, perhaps a CEO appointment of Kotak Mahindra Bank, which was a bit of a move, and a steady set of numbers from Kotak Mahindra with slew of other banking majors. What's your assessment on this? Do you think it is a quarter where banks would continue to outperform, or you think the valuations are now a little bit stretched and one could look at other pockets of strength?
So first of all, season's greetings to you and your entire team and all your viewers. The banking sector was expected to do well and has reported accordingly. I think ICICI numbers are phenomenal. They have reached all-time high numbers, etc. The question really to ask is what from here? And I think broadly the consensus will be that, and we've been saying this for a while, that NII margins have probably peaked and will fall from here, and that is something that is likely to happen going forward. But that doesn't mean that the growth in earnings is likely to slow down anytime soon. So we expect to see growth coming through for all of this year and for most of next year as well, unless until something major happens in the market which slows down, because right now the credit growth is fairly high and fairly robust. Asset quality of most banks is quite good. The only question now is, what about the asset quality on the consumer loans? If we begin to see stress on that side, then some of the issues will come back. But at least on the side of business, for the next 1 year at least, I don't see a problem. So the numbers from the banks are likely to continue to remain high, and they will be a large contributor to the Nifty earnings. From the stock market perspective, however, it's a different ballgame. I think most of what we are talking about is already known in the market, and I think to some extent prices are reflecting some of that. That said, I think some of the frontline banks continue to remain a core part of your portfolio. You know, they have large weightage in the index, as well as the fact that they are delivering means that there is no particular reason to be going underweight. So I would remain overweight on that sector, but I don't expect that sector to be driving growth on the index from here on.
Mr. Tandon, I just wanted to understand, if you continue to be that bullish on the sector, in the pecking order of the majors, what would you like and why? And the second part to the question that I'd want to understand from you is the external candidate coming in for the CEO and the managing director of Kotak Mahindra Bank. Most of the brokerages around have highlighted that as some amount of concerns around that, with Jefferies also downgrading it. What's your assessment? What do you make out of it?
So to answer your first question about which are the ones that are likely to do well, obviously ICICI has already delivered fairly strong numbers. My personal favorite over the next 4 or 5 years would be something like an HDFC Bank. Remember, this is not a recommendation for traders, and certainly not for anyone looking at near term. But the way I look at it is that they have, so the concern right now in the market is that you'll get a 10 to 15 basis points fall in the ROA, and given a leverage of, let's say, 10 times, that translates into an ROE fall of 1.5%. You're still looking at a bank which delivers 15% ROE after all that, whereas many of the other banks are probably at half of that. I don't see, and compared to its historic earnings and price to book value, etc., HDFC is probably quite cheap. So unless there is some major hiccup in terms of their execution capabilities going forward, I think you are best served by holding on to the largest banks, because the core theme that private sector banks will continue to do well, and the larger banks which are technologically savvy and have a good platform and good customer care are the ones that will continue to gain market share, still remains valid. And that's the reason why you see the kind of growth that you're seeing in all the top run banks. So I think the core banks, the large private sector, and some of the public sector which are also going around trying to improve their technological platform and dealing with cost issues, SBI, for example, continue to remain something that you need to have in your portfolio. On Mr. Vaswani's appointment, one, it's very early to say how he will affect. Broadly, from a banking perspective, you would expect to see someone who has a deep understanding of two things: one, customers in India, and two, technology. He ticks off the second box, not so much the first. And that could be some reason for cause for concern, because you have somebody who comes in, especially from the outside world, who doesn't really understand necessarily how the Indian consumer behaves in that kind of depth that you are expected to. But as I said, there is nothing which prevents anyone from quickly adapting. And Kotak has a deep enough team to be able to, for each particular vertical, not to be affected by just one person right at the top, unless he begins to make major changes in terms of the implementation of policy. So the CEO should restrict himself to setting the policy and the strategy goals. And to that extent, I think Kotak is pretty much set. It is very unlikely, other than an increased stress on technology, that a new CEO will be coming in to juggle up the place so far. The key problem with Kotak has been that the growth compared to its ROE is not commensurate. And while I'm all in favor of not necessarily growing aggressively for a bank, especially at a time when you begin to feel that there may be some stresses coming on, the overcapitalization doesn't help. So, a little more aggression in terms of the strategy would be something that would make Kotak more attractive from a market perspective.
Sure. Point well taken and made also. I would like to talk about BSE, perhaps the exchange which is announced in a transaction charge for Sensex option effective November 1st. Any kind of increase in market share here on will start to reflect in the bottom line performance of this exchange. And few expected BSE to give a meaningful fight to NSE, but that perhaps has started taking place. How are you reading into it, and what do you expect out of it?
Well, it's difficult to predict how market shares will shift unless there is an arbitrage opportunity across two exchanges. What happens is that the dominant exchange continues to get the volume. After all, why do you go to an exchange? You want higher liquidity, you want the best price discoveries and the lowest spreads. And that usually means that you need to go to a place where which has the highest traction, and that's a self-fulfilling kind of goal. So attempts in the past for BSE to try and take away derivative market share have not been very successful. To the extent it allows different time frames, etc., for settlement, it may help to create a new market, but otherwise, it's very unlikely to gain momentum. So in this particular case, we'll have to wait and see how it actually pans out. To the extent that it does gain momentum, I think obviously BSE will benefit. And there is no question to my mind that you need to have competition in almost in every field, including markets. So it would be nice to have a second exchange which is also doing well on all segments of the market.
Sure. Just taking a little step back and making the most of your experience for the markets, from a very aerial perspective, it is a holiday shortened week, right? And there is a lot of uncertainty in terms of the US bond yields, global economic uncertainty, the geopolitical situation put together. What's your fair assessment on the markets right now? How do you see the FIIs shaping up? Perhaps we saw some amount of sell-offs coming off for one of the months after the 4-5 consecutive buying streak that we've seen. How are you looking at the markets right now?
So on the one hand, we have a situation where you could argue that the earnings is fairly robust and the valuations are not completely over the top. We have a market which is trading at, let's say, 20 times a year forward earnings, or maybe marginally lower, or just about there. But, it has been a little higher than this in the past. My argument is that, you also have to factor in the fact that the debt markets have now become much more attractive from an investment perspective, and that also makes equity investments less attractive, on a relative basis. So if you start, so you have to look at, step back and see, as you said, what's the total macro picture. So the macro picture is, I do not believe inflation is going away anytime soon. You have more than enough issues that are pending. You have not just a near-term question of a flip in prices, but the fact that you are moving away from finding the best offshore locations for manufacturing to nearshore manufacturing to friendshore manufacturing, all of which comes at a higher price. You are beginning to factor in strategic importance rather than the lowest cost that comes at a higher price. You are looking at a huge debt in the world. I mean, you take the US market, which you mentioned, it has a 33 trillion debt. If you actually were to, and the interest rate has gone up by about 5% over the last 1 year. It was 0.5% a year ago. So if you put in a 5%, that means, back of the envelope, $1.5 trillion of additional interest need to be paid in an economy which is generating $4 trillion of top line, of revenues. And at the same time, you are building up a deficit which is very high. So I think overall, globally, the world is in a situation where debt is a big problem. And therefore, inflation is the only way that most central banks will have to wither away the value of debt. So overall, I think inflation is going to remain high, in which case it becomes a little more, one has to be a little more circumspect about where to put money, at least in terms of the equity markets. I do not see, therefore, significant upside from here unless we have a surprised growth in earnings, which continues for a very long time. At the same time, obviously, India is well positioned. There are rest of the markets are not doing so well. So that kind of equilibrium maintains. I think the key message I can leave is that please focus on your asset allocation. Do not go overboard one way or the other, and see how the market, where the market gives you opportunities, and take it from there rather than taking a ideological position on whether it is cheap or expensive.
Having said that, I was going to ask you about FMCG, but I now want to ask you, which are the pockets of strength according to you?
In the equity markets?
Yes. Which areas do you think that people should be now looking at are not that expensive in terms of asset allocation that they've been making? One pocket of strength that can stand out and valuation remains fairly reasonable at this point of time.
So, in my view, there is no pocket which is valued reasonably other than frontline private sector banks. To look at any segment. So, for example, obviously, consumer growth this year will be very good in the next quarter. This is the festive season, and the 30% of all consumer sales happen in this year, in this part of the season. So, therefore, the numbers for Q3 will look spectacular for almost all consumers. But you look at the price to earnings, you are looking at even with a very high growth factored in, you are looking at a price to growth kind of number at 2 times PEG. which is hardly cheap. I mean, you should be paying not more than one time, especially in a situation where interest rates are likely to normalize. So from the perspective, would you be buying something at 60 times, which is what most consumer companies are trading at? I would think not really, because are you likely to get very sustained growth from there? Look at FMCG, you are getting a single-digit top-line growth from a company like Levers. Yes, Nestle has done better and so on. But if you're getting a single-digit top-line growth, what can you expect in terms of the earnings? And when it trades at 40, 50 times or even more, depending on how far you are looking, there is very little case for assuming that there will be growth from there on. So I think, you have to be looking at, as I said, from on a bottom-up basis, there will be some stocks that you may be able to find which are cheap. The commodity side of the market right now is doing okay, especially hard commodities. It's very likely that some of the soft commodities may do reasonably well because prices have begun to firm up there as well. And if you're betting on rural consumption going up, that can only be on the basis of better price realizations in agri commodities and so on. So plays on that sector, etc., is something that you may want to focus on. But those are opportunistic from a strategy perspective and a slightly longer term perspective. You have to just bet on the fact that India consumption will continue to grow, but you're paying a fairly large amounts of money for it. So diversify, perhaps even diversify currency risk.
All right, Mr. Tandon. Thank you so much for taking out the time and speaking to us. It was indeed a pleasure chatting with you.
Thank you for having me.
Pleasure. Well, we'll just round up other earnings that we have for you. We've spoken about ICICI Bank. We spoke extensively about Kotak Mahindra Bank and slew of other companies, including BSE. But yes, Bank. That's another one that you need to look out for. The Q2 earnings missed the estimate. The profits surged in 47% year-on-year to 225 crore on higher other income and lower provisioning put together. So that's the one that we need to be watching out for. Yes, Bank, which has perhaps taken a little bit of hit. The stock is down by more than 2% in today's session. Talk about PAYTM. That's another one, the new age company where the losses have just narrowed down. Q2 losses had come in at 290 crore. The revenue has surged in 32%. Overall, the losses have come in at 290 crore versus 571 crore. So that's the one that we have for you. PAYTM is right now not faring well. The stock has taken a hit to an extent of more than 2% in early trades. Let's talk about Just Dial. There's another one for you where the Q2 profit has spiked in 37.5% year-on-year basis and the EBITDA is up by as much as 186%. So it's more than 150% growth that we're looking at for this one. Just Dial that you need to watch out for. So these were some of the stocks and news that we had for you. Of course, with this, we'll just call it a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.